Hey guys, how's it going? Paul Harris here. Welcome back to another one of my videos. Today I thought I would answer your questions from my YouTube channel. Let's get into it. Okay, so I'm pretty terrible at responding to people's comments on YouTube. I do appreciate everybody's support. I appreciate all the feedback saying congratulations on hitting 10,000 subscribers. Anyway, let's go through your comments and I'll answer all the questions that you guys have. Obviously I make a range of videos, so I guess this could be about shares, or it could be about accountancy, or it could be something else. Let's see. Okay, so we're on my YouTube channel. Let's go through the questions. Once I feel like I've answered enough questions, end the video. Let's say, can you do a video on Coinbase? I think it's a heavily underrated stock. I think I have done a video on Coinbase. I can do another one since now it's been listed for a while. But I do think I've done a video on Coinbase, so check that out. I know the stock price has been hit quite hard recently. That's probably the result of cryptocurrencies dropping significantly down. I do think on the cryptocurrency front, I think it's quite a good indicator of speculative investments. I'm not going to judge whether one crypto is better than another crypto, but as a whole, there's probably a lot of speculative money out there. And as sort of the Fed increases interest rates, other factors, people's money, inflation is increasing, which people say, crypto is great if inflation happens, because as the cash value of money drops, as your money reduces, because there's such a limited supply of crypto, then the value of crypto goes up. That's been the general argument. But if you think about it, you need a money supply to keep pumping the price of crypto up. So if people have less money because of inflation, they have less money to invest in crypto, so then the market goes down as well. So just a thought. Okay, moving on. Hi Paul, do you not consider allocating some of your portfolio to bonds, i.e. the traditional 60-40 split of equities to bonds? Now, I've read loads of investment books. Some of them are kind of investment-y, self-helpy type books, but, they're still investment books. Now, I would say most of the older ones prior to, say, the 90s, they are talking about this 60-40 split. But you got to remember at that point in time the sort of returns that you were getting from bonds, and those bonds would maybe return, say, 6% or 7%. This is when inflation was double digits. So as a result, it was good because it was a good sort of diversification of your stock portfolio. Nowadays, I hear a lot of good investors like Terry Smith laugh at the idea of investing in bonds because they're just such a low return. And over time, they've delivered such bad returns in comparison to, say, an S&p 500 index tracker. So I don't put any of my money in bonds. I did for a while. And the general thought is, when the market goes down, bonds don't go down as much, and you can reallocate your bonds towards equities and rebalance your portfolio over time, which may apply. But in general, when the market drops down, I found the bonds price, I found everything goes down at the same time. So I don't invest anything in bonds anymore. I don't think they deliver as good a return. And maybe if bond rates go up, interest rates go up, it's probably worth doing. But at the moment, I haven't, and I wouldn't invest in bonds. This is a very interesting analysis. My concern is the average mean is far too impacted by the top 5% of wealthy households to be a reflective target for normal savers. Most people are salaried, often with fixed career earnings. To get to such a high level of savings would seem unachievable, considering many will be paying student loans. 50% young people, considerable mortgages, and most incurring costs of having a family dependence. And I do agree that the top 5% definitely does sway it, but you got to reach higher than, say, the median level of being in your 40s and 50s and having only saved, say, £11,000, because I read this interesting, a lot of the problem is with saving is just the cost of living. That's basically what it comes down to, paying for all your bills and not feeling like you can have a salary that's above and beyond. Because, you see on the internet all these people earning a lot of money, but the reality is most of us earn between 30 and 100,000. And that's all we'll earn for the rest of our lives. And unfortunately, there's places that you can live in the UK where the cost of living is so high, and you might have kids and all this kind of stuff, that it just becomes very difficult to save anything. And that's true. it depends on like what you want to achieve and what you're aiming for. Because if you're just trying to have a retirement at 60, then there's nothing wrong with just saving into your pension. But if you're thinking about trying to have early retirement, unfortunately you have to think about putting as much into your pension as you're putting into your ISA and leaving it there, and that's how you get to retiring at 50. And that's how you get to not retiring at 65. We should catch up sometime. I'm in Edinburgh. Whereabouts are you? I live near Windsor. Have you used Alteryx before at work, and could you do a video on it? No, I haven't used that. Are the skill sets for a finance business partnering role transferable across the industry, i.e. F&B industry transfer to FMCG shipping? And I think it is, and I think a lot of financy roles out there are transferable. It depends what you're referring to, like your ability to work with people, your ability to work with numbers, analysing data. That's all transferable. But I do think what adds value over time when you're working in a company is your ability to know the people in that company and to know what the systems they use in that company, and using all the commercial aspects, in terms of, what the KPIs are, what drives the business, all the metrics and the abbreviations that you have to learn when you start at a company. So it is transferable. And I do think if you've been a finance business partner for a while, when you transfer to a different company, you can hit the ground running in that same sort of role. But in terms of getting your head switched on, if you're analysing shipping and logistics, and next you have to work out what drives a food and beverage company, it's the difficulty is knowing like the different pricing and how like all the margins and things like that. I think it's transferable. It's just being able to convey to the employer that you're switched on enough that they're not hiring someone that's going to take like 2 years for you to like pick it all up. I've watched a few of your videos and really appreciate the perspective. I'm finishing my accounting degree in the next few months and trying to figure out exactly what I want to do and what's going to get me the most experience right off the bat. I have an auditing interview this week, but it's a very small firm. I'm very anxious, not really knowing what I'm getting myself into. I think everyone feels like that coming out of uni or whatever, or finishing a degree. Because who knows? Like, this is the thing, man, about these people who become successful business people. You read about Elon Musk and Bill Gates, and people say, what time does Elon Musk get out of bed in the morning? He gets out of bed at 6 in the morning. Okay, if I get out of bed at 6 in the morning, I'm going to be a billionaire. And it's like, why are you trying to imitate the lifestyle he has now? Like, the reason why Elon Musk is where he is now, amongst 100 different reasons, his work ethic being one of them, obviously. But you have to go back to the fact that he's an incredibly intelligent person with like 4 PhDs or whatever. And the same with Bill Gates, like just incredibly intelligent person. And their ability to like know the whole curriculum and know everything 10 years before everybody else knows, like Bill Gates programming the software for his school when he was like not even near the end of his school, and he made a computer program that determined the different class schedulings for all the kids and all the teachers in the school, different subjects, all that, not many people could do that as an adult. Obviously, that's why they paid this child to do it, this kid. His ability to understand the market and understand where things were going at such a young age is what makes them successful. Now, the fact of the matter is, most of us aren't like that. We sort of muddle through, not really knowing what we're doing. And that's not a bad thing. And it leads to interesting experiences, isn't it? Because you're sort of going with the flow and you're not... It's just a different kind of lifestyle. Not having like this grand plan of how everything works out. People don't have grand plans like these. Unless you do, and then you're probably going to be a very rich person because you're so determined, you know exactly what you're going to do, like these wealthy people. But that's not what most of us are like. Anyway, so don't worry about your what you're getting yourself in for. If you don't like it in 3 years' time, you can just do something else. And I'm sure it'll be good experience. You just have to think you're lucky that you have a job interview, and that's pretty good. Is it worth investing in the S&P and the Legal and General Global Tech Index if they're both covering the same stocks? That was a good question, and I think the answer is probably not. I mean, the reality is, yes, it's a subsection of the same index, so all you're really doing is you're getting some coverage over these value stocks, which people criticize value stocks as just being cheap stocks that no one wants to own, which doesn't have much growth anymore. That's why they trail at low PE ratios. But it's a bit like the S&P 500. The way I see it is, over the long run, it's just better than holding, say, something like bonds. So it creates a bit of a diversified, portfolio where, like with holding bonds, that if the market drops, you can reallocate to, say, higher growth areas. That's how I see the S&P 500. You sort of own it, and okay, it drops, but it's less volatile, say, than other areas like the Global Tech Index, so you could sort of rebalance when certain shifts happen. I was wondering, do you think it's a good idea to do the CFA after ACA for more financial roles? Yes. It's just getting into a CFA. It's very expensive and very difficult. I think there's 3 exams and the pass rate, unlike the ACA where the pass rate is something like 80% per exam, the CFA, it's something like only 25% of people pass all 3 first time, and they cost something like £11,000 each if you want to fund it yourself. And to get someone else to do it, I've even heard like investment banks, they kind of like you to get it, but really they just want you to get, pay your pound of flesh. But it would look good. And if you're interested, I would do, what's the thing is with it's difficult for everybody to get into these roles. And the reality is every qualification makes you look better. But, in reality, you should do something because you want to learn it and you're interested in it, as opposed to thinking it's going to progress you in a certain direction. Warren Buffett always says when he sees these graduates who are miserable in their roles, and they say, what? And Warren Buffett goes, well, why are you doing it if you're so unhappy? And they say, oh, because if I do this for a couple of years, then it'll lead me on to something better. And he says that's the same as saying that you're saving up sex for old age. In reality, why are you putting yourself through hell to do something that you might want to do down the line? Just do something now that you want to do. You could do the CFA, but only do it if you're actually interested in doing it and you want to learn it. Otherwise, just try and find some element of the financial role that you want to do and you're interested in. And even if it's a lower paying, it's not Goldman Sachs, but at least you're working with the numbers and you enjoy doing it, and you may be able to do that straight away in some capacity, as opposed to setting yourself a very challenging task of passing some qualification even after you've just done these exams. And then you might work out straight away that you maybe don't enjoy doing these financial roles, like the ones that you might need a CFA for. I'm eager to invest in US companies, but the withholding tax really puts me off. Do you think it's still worth investing in the long run? And will it not offset a lot of profits generated compared to investing in the FTSE? Withholding tax is something you need to consider if you're investing more than the ISA limit, because I think if you're investing in the ISA, you don't have to pay withholding tax. Generally with tax, when it comes to shares and investments, you need to have a hell of a lot of money before you even need to start worrying about tax. The dividend allowance, even if you didn't invest in an ISA, is £2,000 a year, which I know doesn't sound like a lot of money, but in reality, to have £2,000, say you're getting a 1% dividend rate from the companies you're invested in, that means you have to have £200,000 invested. Now, do you have £200,000 invested? Probably not. And then if you have £200,000 invested, you get something like £11,000 capital gains tax allowance each year. So you could just keep your dividends reinvested in the company and then just up to £2,000 and then just sell the stock of £11,000 each year as an income, as opposed to relying on dividends. And these are just allowances you get without factoring in withholding tax. But then I can't really remember what withholding tax is at this point in time. But I'm sure it doesn't something that concerns me. And you don't want to ever look at just investing in the FTSE just because of tax reasons. You want to look at the companies you're investing in, and are they the best companies to be invested in? I think I'd like a hybrid working model, also have young children, and it is lovely seeing them more. Problem is, whenever I've been to the office, barely anyone has been there, and I've ended up on Teams calls anyway, so often end up coming back home. For hybrid working to work, I'd prefer a company to entice people in on the same day. I miss seeing people and get the isolation feeling. Also, it can be hard to gear yourself up for the day. What do others do to combat that? Good question. I think, in terms of getting myself motivated for the day, I have to set myself large lists of work that I want to do. Because if it's a short list of work I don't want to do, it'll take me all day to do very little of it. So there has to be an urgency. I have to create an urgency for myself. Brother, would you suggest to practice questions even if you can't remember the notes properly or not? This is a question about how to get the ACA qualification. Yeah, I would answer questions. Yes, I would read your notes. I would practice questions even if you can't remember the notes properly, because even the process of just like reading the question and knowing that you've read somewhere the answer, being able to like go through the notes and thinking, where did I see this? Which part of the module was this question relating to? Digging through your notes, finding the answer. I think that process of like struggling to get there and rummaging through seals something in your mind for the next time. So, you can make all these notes properly and read over them hundreds of times, and you can learn through repetition of reading something a lot of times. But the process of actually struggling to get to an answer is always going to make it more clear in your head. Okay, that's it. This video has probably been long enough. Hopefully you find that interesting. If you did, please do subscribe to my channel, like this video. I'll see you next time. Bye-bye.